Good day, traders. Welcome to another edition of Trade Setup. We may not have the time to do top-down analysis of some of these trade setup, but be sure that I've done my analysis from fundamental point of view to higher time frame analysis. But I'll just be showing you the expected entry on some of this pair. I'm going to start from GBP card. GBP card, guys. All right, GBP card has made an impulsive move to the upside. I'm targeting this level, guys, for entry. So we're just waiting patiently. Let this market get to this level. We'll find entry from there. And of course, you know my rule for my entry. Once I see the impulse at the structural level on the higher time frame, I want to see the market comes to this spot 50 to 61.8, and then I want to put my stop loss just below 78%, just below 78% retracement. If it breaks this level, guys, this structure in the setup will no longer be valid. But that is what I see in GBP card, guys. Then looking at gold, guys. All right, looking at gold. Of course, you know that we are looking for sell opportunity in gold. All right, we're looking for a sell opportunity in gold because overall structure is pointing down to sell. But if you take this leg, of course, when you take this leg here, you see that when the market hit 50 to 61.8, it moved down. All right, it flows down. Let's take this leg here. That's the wave 3. Let's see wave 3 should be able to hit this level. We are projecting that it should hit this level because this structure here is resemble that of a zigzag. So this must come to this level. This is the right place for us to look for a sell to the downside. But because the distance or the price difference between 1830 to 1920 it's about 800 pips. So it's not bad to really look for a buy setup to take a buy to the upside, of course. And when you see the end of this retracement on the daily, you actually see what look like an engulfing candlestick. You see, engulfing candlestick pattern. But I don't usually want the candle that engulf to have weeks, to have a wick from the top. I don't like it. Okay, like this one, I don't like it. That shows that if it goes a little, it's still going to come down massively. All right. So, but if you look at the daily in 4 hours, rather, if you look at the 4 hours, in this case, I want to take this 3-wave structure to the upside. This 3-wave structure to the upside. I want to take it as a wave. Then I would like to find the 50 to 61.8% of this wave. All right, and in that case, you are getting it at this level. Okay, so of course, you know the rule before you can take the trade. The rule says that you must be able to define the nature of corrective structure that is coming to, that is making the structure, the market to come to 50 to 61.8. You must be able to define that structure. And in defining this structure, you have a W here. You have 1, 2, 2. That is X. This is, of course, a contracting flat. It's a contracting flat. All you are looking for now is 1, 2, and 3. This is a complete structure, guys. So once you have this, it's a complete structure. Many people will be taking a buy here. Why? Because they do not understand how structure work. And when a market, you know, completes corrective structure, once you come to this area, what happened? Look left. That's the 4th rule. Look left. Do you have a demand area here? Yes. So go and watch this level between 1822 and 1826. So gold is likely to make a move from here, boom, to the upside. So what am I targeting, guys? I'm targeting this level to make a move to the upside. Where's the stop loss? Just below 78% retracement from here, this level to this level. This is 78. My stop loss will just be just below it. That's all. That's the rule. This is a rule-based trading techniques, guy. All right. If you are wrong, you take it, and then you go for another setup. But I have proven this to be right 8 out of 10 times. Okay. So we have looked at GBP card. We have looked at gold. I want us to look at Euro GBP, guys. Euro GBP. Let's look at Euro GBP, guys. Of course, you know right now the interest rate for Euro still stand at 0.25, and that of GBP is 1.25. All right, so we really want a sell opportunity right now for Euro GBP. Okay, but now when you see the structure that is here, I've said it several times that this three-wave move to the downside, will be met with another three-wave move to the upside. If you can break this top, the best for us, come to this level, from here, make a move to the downside. And this corrective structure will be a flat corrective structure. Okay, that will be a flat corrective structure. But it can also be a running flat, guys. It can also be a running flat. Okay, a running flat in the sense that if you have A here, you have one three-way structure here, and then after this three-way structure, guys, you also have, sorry, you have 1, 2, 3, 4, and 5. So this is A, B, and C. So even if we end at this present level, it's still an expanding flat because this level has broken has broken this level. Okay, so at this point now, we want a move to the downside for GBP, Euro GBP. So now you have to look at the kind of selling pressure that we have here. Is it enough to begin to look for sell opportunity? Yes. Can you see? You have this massive move to the upside, and that massive move to the upside, the second day was followed by a massive move to the downside, forming this candlestick pattern that matter here. With this bullish one catching liquidity and this selling pressure appearing in the market at this price level of 0.8700, and you have a massive move to the downside. So if you have it like this, guys, what I normally do is simple. I just look at this pair, these two railroad track. Don't know what to call it. I take a fib of it. Take a fib of it, especially the sell one. Take a fib. On daily, I'll just mark. What I do is I mark 50 to 61.8. I just mark it like this. Okay. Now take your fib out of it. But I told you time without number that when you have this kind of candlestick pattern here, you must see an impulse when you step down to 1 hour time frame. So you go and look at 1 hour time frame, guys. Can you not see an impulse? You have seen an impulse. This is an impulse. Okay, this is an impulse. From this level to this level is an impulse. And so if you mark 50 to 61.8% of an impulse, do you see where it's coming to? All right, see where it's coming to? Good. But now there is possibility of formation of a zigzag corrective structure. Why do I say so? I'm seeing a move down, a move up, 1, 2, 3, a move up. Okay, a move down, a move up, 1, 2, 3, a move up. Then you now have a move down. So this will be A, B, and C. Connecting this 1, 2, and 3, then you must have another 1, 2, and 3. When this one ends here, guys, you have to look left. That's the rule again. When you look left, you see that there is a supply area. In this whole impulsive leg to the downside here, just show me which candle is the biggest along the structural area. Where is the structural area? The area that corresponds to our 50 to 61.8 is the structural area. Look left. This is the healthiest candle. So determine the supply area. Where is the candle that form before this big candle. Look at where it ended here. Look at the candle that formed after it. Look at where it ended here. So this is the most probable level that we are going to have a sell opportunity in Euro GBP. So whatever is doing in the middle along this line, I don't care. I don't care. I'm waiting for it here. Okay. And if I have to wait for it there, that will be the most probable point. And then you now sell from here, from this level to the downside. Where's the stop loss, guy? Just above 78% retracement. Look at 78, just above it for a set. If it's a buy, just below it. Do you understand? It's going to be a cracking trade to the downside, guys. We're expecting it to stop here. Here. Yes. I'm waiting patiently for some of these trades. This is going to be like 1 to 8. You are risking $300, you get $2,400. If you are risking $1,000, you are getting $8,000 on this trade. Okay, so we have looked at gold, we have looked at Euro GBP, we have looked at GBP card. You can also look at Euro card. You see, but I'm not going to support buying Euro card because I have opportunity to buy GBP card and Euro card, but because I'm anticipating that Euro GBP will come down. Okay, Euro GBP will come down. So in that case, GBP will be stronger and Euro will be weaker. So if that is the case, if I have opportunity to buy between Euro card and GBP card, I'm going to buy GBP card, guys. So just leave Euro card alone. Leave Euro card alone. Let's see if we have another trade setup for card CHF. Right now, guys, as you can see, oil is going down. All right. If you look at oil, before we look at card CHF, let's look at oil. Let's see the structure that is formed in oil. Okay, all we want from oil is corrective structure and one more drop. Let it drop. We once it drop, then we'll look at it again. But the best that can happen is if oil, all this corrective structure, if it can break down here. All right, that will be the best for oil. From here, we'll now look for buy opportunity to the upside. That's for oil. But for now, oil is to drop. So if oil is to drop, then you expect that card CHF should also drop. Okay, but if you are seeing this structure, it really look like a three-wave structure. Okay, it's very tempting. Look like a three-wave structure, you know, to the upside. All right, but one thing I want us to check is we need to check whether there's even divergence between this impulse and this impulse. That's what will give us a clue of what we are doing, guys. Can you see lower low? Can you see lower low? So there's no divergence. If that is the case, what we are going to expect right now will be a correction of this level. All right, we want to expect that this market should find its way correct to this level and drop down again. Okay, all right, so if you pick these two right now, this is to sell, stop loss above this, and then boom, to the downside. It doesn't have to be a massive sell-off to the downside. This could just give us a three-wave structure, and then we'll be on a wave to the upside, depending on the situation that oil finds itself. Okay, guys, but you have just learned how we know whether correction will be formed here or reversal will be formed here. We use divergence, guys. So that is a card CHF. All right, another one I want us to take a look at is NZD CHF. NZD CHF is still going to come down, guys. Let's look at it in daily time frame. Can you see what I'm saying, guys? This is a running flat at the middle, running flat at the middle. Then you have this impulse. This is what is called a diagonal in wave A. then three wave structure, 1, 2, 3 in wave B. What do you expect? This wave that comes down here, you must see it here. All right, must complete here. So that's when this structure is complete. So in NZD CHF, by the time you make this valid three wave structure, what happened to this impulse to the upside, guys? This impulse will have come to between 50 to 61.8, which is here, guys, will have come here, about 68% retracement. This is where we are going to find a comfortable buy to the upside for NZD CHF. Okay, which will be in line with the fundamentals that we have concerning NZD CHF. But now it's still at the top. How do we get involved at this level, guys? How do we get involved at this level? It's very simple. We have already seen this gentleman making a lower low, this low lower than this one lower than this one lower than this one. Do we see the same thing happening in the indicator? Oh yes. Can you see in the indicator? You are seeing lower low, and lower low. This shows that there is no divergence, guys. This low lower than this one, lower than this one, lower than this one. No divergence. That's why we knew this one is going to break down to the downside. Now that it has finally broken down to the downside, what do we need to see in 1 hour time frame, guys? What we need to see is simple. We now have to see this impulsive leg to the downside retreats for 50 to 61.8% fib retracement, which is this level, guys. Okay, that's number one. We have seen an impulse. Number two, we want to see it come to 61.8, 50 to 61.8. Number three, we need to define the kind of corrective structure that is formed. So you have A, you have 1, 2, 3. That is B, you have 1, 1, 2, 3. And then you need this move to the upside to form WXY structure, guys. Okay, this one will give you W, X, and Y. Okay, and Y structure. Once it gets here, you have this big supply level here. Any level below this is your trade to the downside. Okay, whenever you get the opportunity, that's your trade to the downside. The same thing is applicable to AUD CHF. You need a move to this level. Let this move come to this level. You need a trade to the downside. It's as simple as that, guys. You need this from here. Put your stop loss here. Boom. So most of the setup, there are a lot of setup, guys. Most of them are not ready now. So most of them are not ready now, and the reason why they are not ready now is because there's no solid move right now on DSY. Okay, see, that's how you go about it. Boom, to the downside. NZD-CHF. Next, you see this one, boom. You want this to get here, boom, to the downside. Okay, let's see USD-JPY. USD-JPY, no setup there now. I think I've showed good. All right, no, good. You want it to come to this level. Let it come down to this level around 1820. Look for buy opportunity there. To the upside. All right. Let's look at Euro AUD. Euro AUD. I'm expecting this market to get to 55. I'm expecting it to get to 55, guys. So it has to get to 55. We have forecasted for quite some times now that we have three wave structure here. Okay, we have three wave structure here. We are expecting another three wave structure here. This completion of structure, guys. But remember, you have three waves up, three waves down before you have three wave structure here. That's very big. So this is W, this is X. X has broken this low. That was why we knew this market is going to the upside, and then Y. So here it has caused supply area. From here, I'm going to have a move to the downside. That's what we are expecting right now on Euro AUD. Let's see what this AUD card is saying. AUD card is saying, of course, when you look at AUD card on a monthly time frame, guys, you see that this big impulse that we see here must be corrected. Okay, of course, you see that we have impulse, we have a correction, we have another impulse. So this three-wave structure to the upside here must be replicated here, guys, to the upside for us to have a complete structure. But then if you look at it very well, you will see that if you take a fib of this impulse here, guys, if you take a fib of this impulse, right now we're at 50%. Okay, we're at 50%. And why we will not accept this 50% retracement is because you have an impulse here, you have a three-wave structure here, then you must have this leg. Okay, you must have this leg before you have a move to the upside. So right now we have a bearish bias for AUD card, guys. You have bearish bias. So let's now analyze this pair in a weekly time frame. Let's analyze it in weekly time frame. All right. So this wave here to the downside is a diagonal in wave A. Then you have 1, 2, and 3. And then what are you expecting next? 1, 2, and 3 to take us to that level. Okay. So everything that is happening right now here in the middle is just a corrective structure for it to go lower. Then how do we now analyze the corrective structure before we now begin to look for the buy opportunity? I will be happy to see the corrective structure of this leg here coming. Remember, this is not your low, this is your low. Remember, orthodox bottom. Okay, so I will be happy if I see this structure forming here. This one, 1, 2, and 3. I'll be happy to see this happen. If it does not happen, no problem. But if it does happen, that'll be the best thing to come. We'll now be looking for sell opportunity right here at the top here. Let it break this level. Why do I want it to break this level? Look at the buy between here and this place. Is that okay? Look at the buy. The buy is massive. So I want my market to start selling, not at the level or at the price level that it bought very well to the upside. If you can break it and catch liquidity here, that would be great for me, guys. That would be great. I would like to see this happen. Let it come to this level before I sell. And then when you go to 1 hour time frame, guys, you are still expecting more upside. So if you are still expecting more upside, then what do you see in this 1 hour time frame that is suggestive of more upside? Okay, what we see here is simple. What we see is simple. We have seen 3 waves up, guys. What we want to see now is 3 waves down. Take liquidity from this demand level, and then we make another 3 wave up again. By the time we make these 3 waves up, guys, okay, to form WXY structure. And how do I come with WXY structure, guys? This is 1, 2, and 3. Okay, this 1, 2, and 3. And then the B structure is made up of 1. No. Hold on, guys. We don't have to make mistake in our structure. The W ends here, then the Y start from here, 1. The X start from here, 1, 2, 3, 1, 2, 3, and then 1, 2, 3. This is WXY that make up the wave P. Okay, this is AB based pattern. Okay, that's advanced stuff, guys. You know it in later days to come. Okay, so this is W, this is X, guys, and this is Y. And this X is made up of another small W, X, and Y. Okay, this is complete. Then you have W here, X, and Y. So we can even take a buy opportunity here to the upside, guys, of this leg what we have to consider first and foremost is to take a fib of this three-wave structure to the upside. You know, I told you when I was teaching fib that you can also fib a correction. Okay, so if this is forming a zigzag corrective structure, which I told you that if a leg of a correction is an impulse and is hitting about 0.5% retracement, just know that that is a zigzag. It's going to form a zigzag. When equal leg of this one and this wave form, that is the completion of the structure. And how do we know the exact spot where equal leg will be formed? Okay, let's first and foremost delete the fib. Okay, let's delete the fib. Let's delete this fib. Okay, now let's go to fib extension. Drop it here, drop it here, drop it here. Okay, so we're expecting it to end here. The equal leg. Can you see? I've marked it before. So end here. Now delete the fib extension. Okay, so you look left to check demand area. There's a good area here. Okay, this market can come over to this level, and then you can take a buy opportunity right here. Boom. Stop loss here, and then go. Catch it here. Let it hit here. All right, so where's the psychological level around this place, guys? That's 8950. Let's be waiting for it at 0.8950 sub psychological level. Okay, so by the time we get to this area, this level here, this will be a very straightforward trade, guys, from this level to the ups to the downside. Is that okay now? So let's look at GBP AUD, guys. That's our 1000 trade to the upside. Right now it has done 260, but we are out of it. What I want to see right now, guys, is the possibility of this market forming a WXY structure. Okay, a WXY structure and coming down. Okay, coming down like this, so that here you have an impulse, this 1, 2, 3, and this. All right, so this becomes 3 waves up, 1, 2, and 3 waves down. Okay, so you have W, X, Y, X, Z. No, it's wrong. Let's do it again. Let's do it again. We have to follow all the guidelines, guys. We have to follow all the guidelines. Let's go to 4 hours and follow all the guidelines. All the guidelines, guys. Okay, so here you have 1, 2, and 3. W, X, Y with a short, with a truncated C, then X, then Z. This Z is going to come over here and break this top. Okay, it is from here we are going to have a massive move to the downside. But which one are we interested in? We're thinking before, this is our wave to the upside, but it became very corrective in nature. That's why we did not want it again. So it will be, if it is possible for it to come down, to come and break this low again, that will be the best opportunity for us to get into the upside. All right, so guys, this is the setup I have for you today. But then before we go, you have to look at DXY and see what it's doing. Okay, see DXY, see what it's doing. Can you see? So that's why DXY is correcting now. That's why you see every market, every pair is quiet right now. Once this DXY can correct this way, we have a push to the upside. Why should we suggest that we should have a push to the upside? If you look at monthly time frame, guys, you will see that DXY has completed a structure. Okay, has completed a structure after a push, 3-wave structure, another push, 3-wave structure. What are you expecting? Another push, possibly to break this top. Do you understand now? So we expect DXY to be bullish. Okay, if DXY is to be bullish, then you now see if you come to lower time frame like 4 hours, you see that we are seeing a corrective structure, a bigger corrective structure right now. This has broken this top. So it has no more thing to do other than to move to the upside, 3 waves and down. So okay, so when we get to this level, we will decide what to do about DXY. But if there's no major move on DXY, expect that market is going to be quiet altogether. Is that okay now? So that is my setup for the week. That's what I'm looking at for the week. This does not in any way constitute trading advice to anybody. Whatever thing I say here is just limited to myself alone. You can you can borrow the idea. I do not force my guideline on anybody. Okay, but I've tested it and I trust the guidelines. Okay, you can also practicalize it on your demo account. If it works for you, fine, you can make use of it. So remember to subscribe to this channel, press notification bell, and let me know whatever way you are confused in this market. Just let me know. I will know the right way to call me. All right, so see you next time, guys. Bye.